This is Entrepreneur Radio, maximizing your personal and business results by leading with your heart. With your host, Terri Lalvani. Listen every week as Terri tackles the topics that will help you become a successful heart-centered entrepreneur. Be sure to read the blog posts at www.heartrepreneur.com/blog. Come back often and add this show to your favorite RSS feed or subscribe in iTunes. You can also follow Terri on Twitter at MentorTerri and on Facebook.com/Heartrepreneur Terri Lalvani. And now here's Terri.
Hello and welcome to Heartrepreneur Radio and TV show with Terri Lalvani. I'm your co-host, Val McGallant, and I'm excited to be here today. You can connect with Terri, me, and other like-minded, heart-based business owners in the Heartrepreneurs with Terri Lalvani Facebook group, so go check it out. And we hope that you love our show. So if you do, we'd love to have you subscribe, like the show, and we always love the 5-star reviews. Today's quote: "Profit is like oxygen, food, water, and blood for the body. They are not the point of life, but without them, there is no life." James C. Collins. Today's show is called Profit First in Business, and our special guest this week is Lalvani. Rocky serves as the Chief Profitability Advisor for business owners. He teaches them how to ensure they get paid and they make profit a priority. As a certified Profit First professional, he implements Mike Michalowicz's Profit First system. We changed the accounting formula of sales minus expense equals profit to sales minus profit equals expenses. This ensures profit comes first. It's not about money at all costs. People come before money. So welcome to the show, Rocky.
Thank you so much for having me here today. Excited to chat with you.
I'm really looking forward to this. There is, I've got my little notebook ready so that I can make sure that I pick up on the juicy bites that we come out of this. One of the things that I noticed immediately was how you changed the formula. Now, most people look at it, sales minus expenses equals profit. And if you remember anything about math from school, whatever you do to one side, you have to do to the other, and you can mix that equation up a bit. So I love that you guys twisted it around and traded places between expenses and profit, because really that makes us more thoughtful about the expenses that we're putting in place, that they aren't eating away at our profit.
That's very true. It's a mindset shift, and it changes the way that you look at things. Too often we're told that you have to spend money to make money. Well, that's by all the people wanting you to spend money with them. And so that is unfortunately the reality of business. And for most business owners, they don't find out if they're profitable until tax time, when they have the conversation with the accountant, and it goes something like this, congratulations, you're profitable this year. And they give them a number, and that begs two questions. The first question is, where is that money? And usually the accountant laughs at them and says, you spent it. And then the second question is, how am I supposed to pay that tax bill? I can't afford that. And so most people freak out at tax time. The nice thing is the people who use Profit First don't have that situation. They've put money aside. They're ready for taxes, and they can stroke a check. They don't like tax season, but at least they know that they're covered. And if they've oversaved for taxes, it's bonus time for them. So it makes tax time a little bit happier.
Absolutely. So what I think I'm hearing is that they calculate the taxes right into that expenses component. Or they calculate it right into the expenses component, but they do that after they think about where the profits are coming in.
Yeah. So basically what we do is we give every dollar a job. And so you're probably familiar with the envelope system.
Mm-hmm.
If you look back a couple of generations, people would get their money and literally they'd have envelopes, and each envelope had a purpose: rent, food, utilities, and they put their money there. Well, Mike said that system worked before. Why can't it work for me as a business owner? And so what he essentially did is use bank accounts because we're not going to have cash sitting everywhere. And as soon as money comes in, we know that money came in because it's sitting in our revenue account. And then we allocate it to, of course, profit first. Then we pay ourselves because most business owners pay themselves last instead of first. Then we put money aside for taxes. And then finally, what's left is your operating expenses. That's your spending money. That's what you're allowed to live off of in your business. And so when you go to look at your bank account, you get a true picture of how much you have to spend after you've already paid yourself, paid your taxes, and paid your profits.
So we're calculating what's allowable for expenses and then making sure that our decisions are within that, rather than spending the money and finding out later that we actually didn't have enough to cover that or the rest of it. It ate into our profits.
That's true. When you look at one big bank account, it looks like a lot of money. And so you think you can spend, but the reality is a lot of that money may have already been spent. And if you don't realize it, then you're going to short yourself. And that's why business owners struggle to pay themselves, struggle with taxes, and struggle with profit, because they tend to spend it and not allocate it towards those particular purposes.
Hey there, it's Terri Levine. I just wanted to pop in for just a moment as you're listening here to Heartrepreneur Radio and watching Heartrepreneur TV. We have so many new and exciting things going on. So you can watch a free masterclass. Highly recommend to get a conveyor belt of qualified prospects. That's at TL, like Terri Levine, tlwebinar.com. Head over there, enjoy it, keep listening and sharing the show.
So I think a lot of business owners get caught up in, I had this much money come in, and that's where they stop the thought process. That's where they stop the celebration, is I had this much in sales, but that doesn't take into account the full equation.
It doesn't. It's very easy to look at sales because you know what you sold. It's very hard to look at expenses because they drip in at all different times, and a lot of them sneak in, right? You don't even know that they're happening. And so I think it's just a mindset shift. The other thing is, just because you sell something doesn't mean you've collected. Depending on the type of business you are, it might be 30, 60, 90 days before you actually get that check. In the meantime, you have to spend to deliver what it is that you have promised the client. And so that also causes cash flow issues. And you have to plan for those as well and make sure that you can handle that if you're not getting paid up front.
Right. So definitely calculating the cash flow into the full picture. So how do we go about making sure that we are looking at the full picture of what we're doing? Are there ways to be able to keep track of things a little bit easier?
Well, I think by setting up the bank accounts and by setting up a rhythm where you take money, whether it be weekly or twice a month or once a month, out of your income account, putting it into the other accounts, you're giving each dollar a job and you're telling it what its purpose is. And then you just have to stay true to the purpose. So don't steal your pay to go buy something. Make sure you get paid. And so I think that system does it automatically. And it's based on something called Parkinson's law. So what Parkinson's law says is that we will use up all the resources allocated. And so within a business, if you're given a budget of $100,000, you'll spend $100,000. But if you're given a budget of $20,000, well, you'll find a way to be resourceful and you'll find a way to get it done with $20,000. It also works for time. If you have a 3-month time frame, it takes 3 months. If you have a 3-week time frame, it gets done in 3 weeks. And so what you need to do is constrain yourself. And that's what paying yourself first, taking the profits, covering for taxes, constrains your spending. And people will say, well, how am I going to get these kind of results? And everyone has heard of the 80-20 rule. Again, 20% give you 80% of the results, which means 40% gives you 96% of the results. So if you can constrain yourself to the 40%, you can still get 96% of the results you're looking for. You just have to spend the time working on your business instead of just being in your business and spending because, oh, there was money in the bank account or because I have to. It's challenging all of those things and thinking in more depth about them.
Well, and that kind of fits with the more money you have, the more money you spend kind of mentality that really is quite prevalent right now.
It is.
For many of us.
It's lifestyle inflation, right? The
Mhm.
more you have coming in, the more you think you deserve, the more you spend. What I tell business owners, if you have a 10% profit margin, that
Mhm.
means for every $10 that comes in, you only have one additional dollar to spend. And I think too often people say, oh, I got $10, I can spend $10. No, you still have to deliver your product. You have to do all your services. You only have one additional dollar to spend. And learning that ratio. And again, it comes back to constraining your spending and being more resourceful. There are ways to do this without spending less. It's finding solutions that don't require as much money.
Well, I mean, you said right at the beginning that it's a mindset, and so what I hear with that is we want to be mindful about it. That having these separate accounts, and do we really have to have separate bank accounts, or is that just can we do that within our bookkeeping system?
Nobody's looking at their bookkeeping system. And by the time you get the numbers, they're so old. Like that's why I think a lot of people aren't looking at their bookkeeping because it's a rear view mirror. And most
Mm.
entrepreneurs and business owners, they're looking forward. Like, what am I going to do tomorrow? I need to bring in dollars tomorrow. By the time their books are up to date, it's telling them what happened. In a sense, it's irrelevant by that time. So if you're trying to do this in your bookkeeping system, it's not going to work because it's old information. You've got to actually get real-time information. The truth is most business owners check their bank account and that's how they make decisions. And I've heard some say they check it 3 to 5 times a day. They're just constantly looking, is money coming? Is money going? What's happening? And so that's why you need real-time information. This system leverages your bad habits.
Awesome. So really it's like we have the bank account that the money comes into, and then we allocate it into the tax account and this the profit account and all of that kind of stuff, and then our expense account, that's the one we need to be looking at all the time because that's the accurate representation of what we have available to spend.
That is correct. And then it naturally constrains you and it gets you to say, okay, I don't have money. What am I going to do differently? So it might motivate you to sell. It might
Mhm.
motivate you to consider, hey, maybe I need to raise prices. It might motivate you to say, is there a better way we can deliver services that's not going to cost me as much to deliver them? How do I make my business more efficient?
Right. Yes, I like that. How to make my business more efficient. So I've got to, I'm going to write that down because I do have a question about that. I want to make sure that our listeners know how to connect to you. What is the best way for them to connect to you?
So the website is profitcomesfirst.com. And if they go to the website, there's a variety of things that they can find there. They will find the podcast, Profit Answer Man, where I literally teach everything that we're talking about today in much more depth. And everything that I share with my clients, I share on the podcast. So there's nothing hidden.
Mhm.
If they want to check out Mike's book, I'll give you 2 free chapters for free, along with a bunch of other tools. You can see if it's even worth your investing in the book and taking the time to read it. And there's also an effortless cash flow course that's on there that people can purchase if they want to go into more depth and have something to follow along and teach them how to do everything in that kind of format. So just a variety of different tools for them.
Awesome. Awesome. Okay. And So if somebody wants to go and read the book and that kind of thing and take the course, is this going to be useful for somebody who, delegates all of the bookkeeping and paying attention to the money and stuff like that? Is it still going to be of value to somebody like that?
It is, because here's the reality of the situation. Employees are trained to spend money. They're not trained to save you money and make you profitable. So it's okay if you delegate the system and tell people what you want them to do for you, but you still need to have a watchful eye, and you need to trust and verify that things are getting done in the way that you expect them to get done. So somebody in your company has to look at your spending. What happens more often than not is you start signing up for all these software, you sign up for this, you sign up for that recurring charge, and you don't even know that all these leaks are going on. So what we recommend is, maybe once a quarter, sit down and look at every single transaction and ask yourself, did this serve my clients? Did it help me to deliver my product? Is this something that we need in our business, but maybe we can find a better, lower cost way to implement? And then the last one, which shows up a lot, is vanity spending. Business owners spend a lot of money on things they want or think they need. And a big part of making your business profitable is to cut out the vanity spending. So we tell most business owners, you could probably cut 10% of spending almost overnight and put it to your bottom line of profit.
That's a significant amount, actually. So, and that actually answered the question that I kind of had waiting in the wings, was talking about being more efficient about our spending, because I know that I have caught a few things, and I know it's time for me to do another reassessment. I've caught a few things that I have had as a monthly commitment that I stopped using. And if you're not paying attention to those things slip through the radar because they're in your books that you don't look at all the time.
Correct. And you may change the way you do business. Something better may come along, or maybe you had 3 different systems and now you're using a different system that eliminated those 3, but nobody bothered to cancel them, or you canceled them and they didn't get canceled. Life happens, right?
Yes.
And so it's making sure that you are efficiently running your business. Every large corporation has a CFO, and their whole job is to make sure that the money is flowing where it's supposed to and that it's being done appropriately. If you're a small business owner, you've got to wear every hat, and you don't have to wear this hat for very long, but at some point you've got to put it on and say, what are my finances doing? Or you've got to put somebody competent in the seat to do that.
Right. And so if you're, a really small business, a solopreneur, or, you've only got a few team members, or maybe you contract your team members as well. What I'm hearing is you want to put that CFO hat on at least quarterly, if not monthly.
Correct. And if you think about it, and this is, I think, where people get confused. People think their bookkeeper and their CPA are doing this, and that's not really the case. Your bookkeeper's job is to make sure the transactions get into the software and everything is organized. Your CPA's job is to do your tax return. And so they're looking to do their best to lower your taxes. Well, the fastest way for them to lower your taxes is for you to spend more money, right? Which makes you unprofitable. So they each have their role, and their roles are appropriate, but neither one is generally charged with making you profitable. Too often, I think business owners think that those people are doing that, but they're not, unless you specifically said that.
So it really is a misunderstanding of what their roles are and how they fit into the bigger picture. Okay.
That is true.
Okay, that makes a lot of sense. Are there other ways that we can improve the expenditure efficiency, or even the profitability efficiency inside of our company?
Yeah. So what I like to tell business owners is I like to work less and make more. And so if I want to
Yes.
double my profit, I don't want to sell twice as much because that's a lot of work. And so one way to do this, if you had, like we talked about before, if you had a 10% profit margin, if you're able to raise prices by 10%, well, you just doubled your profits and you didn't do any additional work. I think a lot of times business owners are afraid to raise prices and they don't think people will pay. And it really depends on your industry, but there are
Mhm.
many industries and there are many different offerings where you could increase your prices and get that kind of service. And you're talking about solopreneurs. And I don't know, do you have a lot of coaches and people who do that kind of work listening to you?
We do have a number of solopreneurs. We also have a number of entrepreneurs that listen to the show and Terry's work. So yeah,
Okay.
we do.
A bottom line is number one is, can you increase your prices by 10%? The other thing is, can you cut your costs by 10%? If you did
Mhm.
both of those, you would go from a 10% profit margin to a 30%, almost 30% profit margin.
Well, and it kind of makes sense too. Like you were talking about the fear. If we raise our prices, the kind of fear that can come in, will my clients want to pay that increase? And well, let's say you increased it and you lost one client. You're still making, say, for example, you're still making the same amount of money, but your expenses for serving those same clients has gone down. So you still have increased your profit, and you probably increased your time profit as well by having to serve little bit fewer clients as well.
And that's true. And so the other thing is you have to look at your business. And what I talk about is pools of profit. So let's say you have 5 different offerings. Well, one of your offerings might be highly profitable. 2 of them might be break even, and 2 of them might actually be losing you money. If you haven't sat down to look at the not
Mm.
only just the cost of providing the service, but the time effort that goes into that as well, you may find that some of your offerings, once you start calculating all the hours in, are negative. And even if you, what I have my clients do is we look at what they budgeted for something and what the actual was for that. Because a lot of times we'll find out we think it's costing us this, but when we do an audit and we look at it, we realize we're spending a lot more money in delivering that service. And so removing unprofitable items from your offerings just on its own can save you a ton of time and make you more profitable. It's hard for business owners to say, well, I'm making $1 million. I'm going to give up $250,000 of revenue because my profit's going to go up by $100,000. And that's a struggle for a lot of people, but it's a reality. Even though you're dropping your sales by a quarter, if your profits can go up by doing that, well, then you're working less and you're making more. And at the end of the day, that's what we should all be focused on.
Awesome. So I'm hearing that some of our audit process should not only be auditing our expenses on a quarterly basis, making sure that we're efficient with those expenses, but it's also being efficient with our offerings as well.
Yeah,
Okay.
more often than not, I think companies would be shocked at how little profit they might be making with some of the things that they're doing, or don't realize how much time is involved in doing certain things. The other things is, if you look at a company and they do small jobs and big jobs, well, it could be that small jobs are just eating up all their time and not very profitable. And so they might say, oh, we should be focused on big jobs. And so then they'll set a minimum. We don't do a job under X because the cost of setting up, preparing, and everything else doesn't really make it profitable. And it's chewing up time, but it's not helping us in the long run.
That makes a lot of sense too. And what I'm really hearing is how easy it is for the income numbers to distract us from a lot of really important details that would really bump up our profit a lot if we
Yeah.
paid
So
attention to them.
We have a little saying, top line is vanity, bottom line is sanity, and cash flow is reality. Too often, everyone is focused on top line, but that's really a vanity number because I don't care how much you bring in. I care how much you keep. What's your bottom line and how much of that do you keep? And you don't hear people going around saying, oh, this was my bottom line. You hear everyone talking about top line because it's easy to understand top line. It's hard to figure out the bottom line.
Well, and I think too, I like that. It is easier to look at the top line, and then that's because really top line is a lot easier to brag about than bottom line.
It is. It's a smaller number, but at the end of the day, the bottom line is what you keep, and that's really what matters. And the bottom line affects your cash flow. And so there are businesses, who have tons of revenue, but they struggle with cash flow and they struggle with profit.
Okay, that makes a lot of sense. So I want to make sure, again, that our listeners know exactly where to connect with you. Can you share your website again?
Yeah, so the website is profitcomesfirst.com, and you can find all the resources right there.
Awesome. And what's the name of the book if somebody wants to go look on Amazon and pick up the book?
So the book is Mike Michalowicz's book, and it's called Profit First.
Profit First. Okay, awesome. Rocky, this was fantastic. I thoroughly enjoyed our conversation, and there's some really good information in there for people to grab onto in understanding that, just because you've got the nice big income numbers doesn't mean that you have the nice big profit numbers. And it doesn't sound like it's a really difficult thing for us to wrap our minds around and to be able to start implementing.
No, it's a pretty simple and easy system to implement. And because it's simple and easy, everyone's like, oh, that won't work. But it does. Hundreds of thousands of businesses have implemented, and they have gone from years of struggling to now, for the first time, being profitable, getting paid, and really starting to love their business.
Perfect. Oh, and I think you did say that they could get to the first 2 chapters of the book for free from your website. Is that correct?
That is correct. They can get the first 2 chapters for free. And if you're not a reader, which I know some of you aren't, if you listen to the podcast Profit Answer Man, I go through all the chapters of the book. I don't read them to you. I tell you the highlights and some takeaway points. So if that's more your style, go listen to Profit Answer Man. It's the first set of episodes.
Perfect. Awesome. Thanks so much for your time, Rocky. I really appreciate it.
Thanks so much for having me today, Velma. It was great to be with you.
And thank you to our listeners. Love that you show up each week, and I hope you find value in what we offer here. I want to remind you to go to Facebook and look for Heartrepreneurs with Terri Levine. You'll be able to connect with more heart-based business owners there. And again, if you liked this show, please hit that like button. We'd love for you to subscribe. And we always love the 5-star reviews. Thank you, and see you next week.
You've been listening to Heartrepreneur Radio, maximizing your personal and business results by leading with your heart with your host, Terri Levine. This show is produced every week for your enjoyment and education. To make sure you never miss a single show, add us to your favorite RSS feed or subscribe in iTunes. You can also read Terri's latest blog posts at www.heartrepreneur.com/blog or follow Terri on Twitter at MentorTerri and on Facebook.com/Heartrepreneur Terri Levine. Your questions and comments are always welcome and appreciated. Send them to Terri on either Facebook or Twitter. Thank you for listening.